Hey friends, it is your mortgage guy, Dan Keller. It's my favorite time of the year because one, it's the holidays. Two, it's the end of the year and we get to plan for the next year, kind of hit the reset button, learn from what we did really, really well, learn from things that we could improve upon, and start over in January and do it all over again. And so today it's Saturday, December 21st, 2024. Talk about three things in particular today. I'm going to talk about the state of the market, some things that you need to understand about the mortgage and real estate space. We're going to talk about some really great opportunities or forecasts for 2025. And remember, this is all data-driven and experience-driven, not opinions. And then I'm going to close today with a few things that I'm going to do specifically for you, clients of mine, in 2025 that's going to help you better manage your mortgage, help you better understand real estate and investment opportunities with certain professionals that I'm going to expose to you guys, and I'm really excited for that in 2025. And so I want to start with this. It's the 21st. It's Saturday. This last week, we got to help 3 families get into their homes right before Christmas, and it's so special. I love helping great clients get into new homes before the holidays and start making special memories for their families. And so I tell you this because the first thing I want to share with you is the state of the market. So about 4 years ago, there was just shy of about 300,000 licensed mortgage professionals in the mortgage industry across the United States of America. Today, we're just shy of 85,000. So a massive drop. Hey, I'll tell you what, 3 years of high interest rates and high inflation and limited inventory will take its toll on any industry. Well, it's taken its toll on the real estate and mortgage industry. So I tell you this because it's my 18th year in the mortgage industry as a full-time mortgage professional. I don't do anything on the side. I invest in real estate, I invest in the stock market, and I work full-time as a mortgage professional. I run a branch and have a great team behind me. And this is what I do full-time. I'm a student of the market that I'm in. And I tell you this because it's so important that moving forward, that you're working with professionals. You're working with full-time professionals that understand the market. This is not a market for part-timers or amateurs. Over the last 4 to 6 weeks, I've met yesterday, 6 new real estate agents that are going to start working with us, and they're changing their lending relationship because their lender is not doing a great job, working a part-time job, or just getting out of the industry. And so the first thing I wanted to share with you is that there has been the inflation, the high rates, the limited inventory has taken its toll on our industries. I don't see that changing in 2025. Now this is a great transition point into, in order for me to say that, I've got to have some context around that and provide you some perspective. So let's take a look at this. It's important to understand current 30-year fixed rates, where they're at right now. Now, let me hit pause on this overview real quick. Let's go back just last week. We all know that the Fed chairman spoke, and they lowered the Fed rate by 1/4 percentage point. But guess what happened? Mortgage rates went up. And so it confused a lot of people. And people were like, what the heck? Even mortgage professionals and real estate agents were like, Dan, what in the heck just happened? It's not what the Fed did, it's what the Fed said. Now, the Fed chairman decommitted to lowering the Fed rate in 2025 by 100 basis points or 1 percentage point down in half to a 0.5 percentage point or 50 basis points, okay? Now, what that does, it doesn't directly lower interest rates. Now remember, interest rates are indirectly related to the Fed. So when the Fed drops the Fed rate, typically after that, whether it be a week or a month, the Fed rate drops and mortgage rates drop typically in a delayed fashion, but they drop with the Fed rate. So that's not great news for mortgage rates. That's not great news for rates in general for 2025, but the Fed came out and they said that. Now, is that going to be true? Is that going to happen? Right now they're saying it, but things could change. Now, because they said that, rates went up. So what does that mean for 2025? It means more business as usual. So let's take a look at this. Current 30-year fixed rates are about 6.875 to 7% right here in the last week of December. Now, 1 year ago, So December of 2023, interest rates were in the low 7s. So not too far off where we're at right now. So all in all, right about the same. But let's not forget about this. In October of 2023, right before about a year ago, interest rates were in the 8s, okay? So, hey, 6.875 doesn't sound all too bad. Now, let's look at recent lows. So in September of 2024, let's remember this because, hey, I remember September, fall of this last year, a couple of months ago, rates dropped in the low 6s and we're like, yes, this is our time. Hey, rates are gonna start dropping. We're gonna get some help. And then boom, a week later, right back up to 6.5%, 7%. So what do I think is gonna happen in 2025 based off of data? Well, here's what we know. National Association of Realtors, Realtor.com, Zillow, and MBS Highway. MBS Highway is a service that I pay a lot of money for to have kind of inside information on the bond market and Wall Street and the 10-year Treasury and what's driving those and what's causing those or potentially causing the markets to move there. They've surveyed each one of those entities. And fast forward to the end of 2025, here's their predictions. Realtor.com says predicts interest rates in the low 6s. NAR says near 6%. National Association of Realtors says near 6%. Zillow doesn't want anything to do with it. They're staying out of the prediction game. And then you have MBS Highway saying upper 5s. Now, I can tell you, over the last 5 or 6 years, MBS Highway, this service that I pay money to subscribe to, one of the top economists in the mortgage space, they're always pretty spot on, really darn close. So they're saying upper 5s, low 6s, so nothing much different what we're seeing right now. Maybe a little bit improvement, but not a lot. So remember, all these marketing and social media influencers and unprofessional mortgage people that say, hey, date the rate, marry the home, which is garbage advice, by the way. You've never heard me say that. You can throw that out the window. This is going on 4 years of a really ugly relationship, and we're still stuck in that date, right? I don't like that adage. If you want to buy, I just got off the phone with a really good client of mine. They're thinking about making a move east of the mountains. And I said, make the move, dude. Don't try to time the market. Don't wait for another good opportunity. If you can sell your home and get what you want from it, if you can buy a home in Eastern Washington and buy it for what you want and it makes financial sense, do it. Okay? You're not going to lose out a year from now. You're not going to, hit the jackpot by not doing it a year from now. Just do it. Okay? If it makes financial sense, do it. Now, these are nationwide numbers that we're looking at right now, but they're expecting existing home sales to increase 7 to 12%, which is good. That means we'll have a little bit more inventory. And then they're expecting prices to increase around 4%. And again, this is nationwide. Up here in the Seattle area, we're a little bit better than that. So about the same, 6-ish to 8% appreciation. That's solid appreciation. That's within the national 40-year norm. Now, the thing I want to close with, you guys, is this. Every time rates drop, pending home sales go up. The advice and the strategy that I give my clients is try to make the move before everyone else does, okay? If you're investing in something when the masses are investing in it, you got a late start. You're too late to the game. Listen to people like myself, smart economists, great financial planners, and the advice is pretty dang solid. If it makes financial sense, if the timing is right, buy the house or sell the house and buy the house, right? Or refinance the house, okay? Let's not wait for something to happen because it may not happen. I think we're gonna see 30-year fixed rates in the mid to lower 6s for 2025. Make your plans accordingly, right? Use that as your budgeting tool. Reach out to me and I'll run some budgeting reports for you. But if you're gonna wait for rates to drop, pending home sales are gonna go up and you're gonna pay for that. Buy now and then inherit the appreciation when the market does drop. Because remember, you can always refinance when rates do drop. You can't go rebuy the home, all right? So, lastly, in the last minute, opportunities for you as a client or a friend of mine in 2025. I'm gonna host a monthly budgeting class, and I'm gonna get back to hosting my monthly wine and wisdom events where I'm gonna bring financial planners and estate attorneys and really smart people to come out and help you better manage your money, your mortgage, and your real estate in 2025. So do me a huge favor, you guys, at Christmas parties or holiday parties or New Year parties or college football or pro football parties, if you hear of anyone that wants to finance or buy or invest in real estate in 2025, would you mind making an introduction? get them in front of me so they can inherit and they can get this good financial advice versus taking a risk or a chance in the market. And one last thing, I had a question the other day. Dan, I have an extra $100,000 sitting around. What should I do with it? Here was my advice. I like Bitcoin for crypto if you're going to go with crypto. I like the S&P 500 index for investing in the stock market or investing in Wall Street. And I like real estate. If you put your money in one of those three or all three of those things, you're going to be fine long term. And one last disclaimer, that was not financial advice. That's what Dan Keller is doing. It's sound financial advice that I'm getting from my mentors and financial planners. But anything outside of that, any get rich quick or any hit a home run on this investment, stick to your fundamentals, stick to solid, sound financial principles, play the long game, and you'll win, okay? Merry Christmas, Happy New Year, and we'll see you on the other side in 2025. Bye for now.